All right, Zach, this morning CPI numbers came out for the month of October. I've got this chart on the screen. Tell me what this means.
So what we see right here is the October that's in yellow is the month that we replaced. So last year in October, inflation came back at 0.6, and today we replaced it with a figure of 0.3, which is October's in white. Now, this ended up being better than expectation. They thought it was going to be around 0.4, came in at 0.3, and this is causing the markets to really love it. We're seeing the stock market get better, as well as 30-year interest rates getting better because of it. Now, as we look at this, we're also replacing November, December, and January in the next 3 months, and these are all three high readings. We're likely to replace those with 0.3s and 0.2s from what we're hearing right now, which means we're likely to see inflation get better by about 1% over the next 90 days. So from your perspective, Scott, what's that going to do for both buyers and sellers?
Well, it's really what we've been telling our clients for the past few months, that there's this window where sellers are having a hard time finding buyers because a lot of buyers have pulled off. They're standing on the sidelines saying, I'm going to wait until rates get better. And then as soon as that happens, of course, they're going to come back into the market. So there's this window of timing where we've been telling our clients somewhere in the last quarter of 2022 or the first quarter of 2023, rates are going to start to come down and sellers are not going to give as many concessions. They're not going to be as flexible. They're not going to drop their prices. And we have seen over the last few months some really good deals come through the market where sellers are a little bit panicked. They don't have any buyers. They're dropping the price. So there's been some really good opportunities to capitalize on that right now. I think even this morning, there was one of Utah's larger builders. As soon as the CPI number came out, he put out an announcement to his entire company and said, okay, no more 2-1 buy downs, folks. We're not going to pay for buyers to have a 2-1 buy down. So we're starting to see this shift. And it'll still take some time to play out. But I think the beautiful thing is here, if you're a seller, you probably want to wait until spring to sell because there's going to be more buyers that continue to come into the market between now and spring. If you're a buyer, you probably want to jump on the boat here sooner than later, because as the inflation numbers show that things are coming down, rates are going to come down with it. More buyers are going to come into the market, and the good deals that we're seeing with sellers right now are going to disappear over the next few months.
Perfect. Well, the beautiful thing is too, is somebody could purchase in November, December, January, and likely sometime over the next, 12 to 18 months, you're thinking they'll have an opportunity to refinance, get the rate even lower than what it is, and probably be sitting in a really good position.
Yeah, I'm glad you brought that up because think about it. If you could get a home at $40,000 under market value, but you had to pay, let's even say 2% higher than the rate that you could get if you didn't have to, if you paid market price, you'll come out way ahead if you can get $40,000 off versus paying 2% over, because there is going to be an opportunity to refinance sometime in the next few years. And, you can't go back and renegotiate the price, right? Once you pay it, that's what it is. But the interest rate is something that can be changed over time. Well, good insights. Thanks for your insight on this. It's a nice thing to see that inflation's turning. It's going to help a lot of people nationally. But what it does for buyers is it kind of puts them on alert that this is the time to start paying attention, because the best deals are probably going to happen sometime here in the next 60 to 90 days.